If I had to start over in real estate today with no properties, no experience, no network, but knowing everything I know from over 25 years of investing, owning and operating 180 of our own doors and over 2,300 syndicated units, here's exactly how I get started in 2026, step by step. And here's the important part. 2026 isn't just another year in real estate. I think it's a really unique time to jump in, especially if you've been sitting on the sidelines. By the end of this video, you'll know why this window exists and the exact path I'd follow if I were starting from scratch. Now, before I walk you through the exact steps I'd take to get started in real estate, we need to talk about something most investors never admit. The biggest reason people don't benefit from real estate has nothing to do with the economy or market conditions. It's not interest rates, it's not lack of deals, it's not timing. It's that they never actually get started. They stay stuck, not because there's no opportunities, but because they're overwhelmed with strategies, paralyzed by fear of making a mistake, drowning in information, and not clear on what they're actually trying to achieve. So they end up doing what most high-income earners do. They research, they watch videos, they run numbers, but they never get started. And in this video, I'm going to be talking about what you actually need to do next if you want to start investing in 2026. The decisions, the mindset shifts, and the exact sequence I'd follow if I were starting over with no properties, no experience, and no network. And because 2026 is such a unique window, we need to start with why this moment exists and why most investors won't realize what's happening until the window closes. 2026 is a very unique window of opportunity, especially if you're just getting started. And the reason is simple. For the first time in years, interest rates are finally starting to trend down. And that shift is opening a door most people won't realize until it's already closing. Think back to what happened in 2022. Interest rates more than doubled from the historic lows of 2020 and 2021. That shock pulled a massive number of people out of the market. Transactions slowed, a lot of investors got cold feet, momentum in real estate died almost overnight. But that period is ending, and the reset has already begun. Rates are now starting to come down again, and that alone would make 2026 pretty interesting. But this year isn't being shaped by just one factor. It's being shaped by a second huge factor. The tax benefits of investing in real estate got even better. Because in July of 2025, as part of the One Big Beautiful Bill, 100% bonus depreciation came back. Now, if you're investing actively and you know how to use it, this opens the door to some incredible tax savings. And here's the part most people forget. The last time bonus depreciation came back, in 2017, it helped fuel the real estate boom of 2020 and 2021. So in 2026, you're seeing something rare. Falling interest rates combined with bonus depreciation returning creates a window of opportunity you almost never get twice in one decade. But here's the hard truth. Even with rates dropping, even with bonus depreciation back, most investors are still sitting on the sidelines. They're waiting, they're cautious, they're unsure, and I expect many of them to stay frozen a little while longer, maybe forever. That means something you almost never get in real estate: low competition, at least for now. But that window will not stay open for long, because once investors wake up to the combination of falling rates and bonus depreciation, they're going to rush back in. And when they do, markets will heat up again, fast. And it's going to get more competitive, like it was back in 2020 and 2021. That's why this moment matters. Right now is one of the best times to build relationships with the people who will make or break your success. Investor agents, contractors, property managers. For the first time in years, they're actually available. They'll take your calls, answer your questions, and give you their time. But once the crowd rushes back in, that'll change quickly. There's one more factor shaping this moment. The stock market is overheated. That can mean stocks can go down a lot. It might not just be a temporary setback. It could mean another lost decade where the value of your stock stays flat and your portfolio doesn't grow. The last one was in 2000 to 2009. Imagine a 10-year period where your stocks do nothing. Now, when that happens, people start looking for more control, more cash flow, more predictability. Exactly what real estate provides. But for most people, that realization comes after the damage is done. You want to position yourself before that shift happens, not react to it. So no, it's not 2021. The market isn't on fire. It's not chaotic. But that's exactly the point. Think of this as the calm before the storm. This is the moment to learn, get positioned, and take action while everyone else is still waking up to what's actually happening. Now let's talk about something even more important. Why most people never get started, even when the opportunity is right in front of them. Otherwise, you also may choose to stay stuck and miss out on what's ahead. Most people who want to get into real estate never do. And it almost never comes down to timing or lack of opportunity. It's because they're stuck. And after working with thousands of high-income earners, I see the same patterns show up again and again. First, they don't have a clear result they're aiming for. They're not sure what they want real estate to do for them. So they get distracted by every new strategy, every niche, every shiny object that promises a shortcut. We'll talk about some of these in a minute. Or they try to research their way to confidence because they don't have a clear direction, so they spin in circles. They consume videos, they run numbers, they analyze markets, but they don't actually move, because without clarity, making a move feels risky. Second, they don't have a strong enough purpose, a real reason to push through the discomfort and get started. And without that purpose, fear wins out, because fear always shows up. Which brings us to the third reason. They're afraid. Afraid of making a mistake, afraid of losing money, afraid of the unknown, afraid of looking like they don't know what they're doing, especially when they're successful in their careers. But here's the truth that changed everything for us. Fear is part of the process. It's baked into anything worth doing. When my wife and I started investing together in 2015, we felt all of that too. But we had a clear goal: replace both of our incomes as doctors in 7 years. And we had a strong purpose: more time together, more time with the family we wanted to start. That clarity and the purpose helped us move through the fear. And even now, that fear still shows up. Buying our first 32-unit property, there was definitely fear there. Buying our first 100-unit, fear on a completely different level. And it doesn't stop there. Our first capital raise, were we going to hit our target? Every time we start a new business, is this going to crash and burn like the majority of new startups? Our first mastermind, was anybody going to show up? And our first national conference, where we invested $500,000 to put it on, were we going to make money, break even, or lose money? Every time we do something new, fear is right there with us. But we've learned something important. Fear is not a stop sign. It's a signal to keep going. It means you're stepping into something meaningful. It means you're about to become a better version of yourself. And if you're feeling it, you're right on track. Now with that in mind, let's talk about the very first thing I'd do if I were starting over in 2026, before I even looked at a single property. So what would I do first if I were starting over in 2026? I'd get crystal clear on what I want real estate to do for me. Not a perfect plan, and not even a detailed 5-year blueprint. What you need is a high-level target, a direction. Because if you don't know what you're aiming at, everything looks like an opportunity, and that's exactly what keeps people stuck. So ask yourself, are you trying to replace your income, lower your tax bill, build long-term wealth, or hit financial freedom as fast as possible? Each of those paths work, but each requires a different strategy. Let's break that down. If your main goal is tax savings, the only way to unlock the full tax benefits of real estate is to invest actively, not passively in syndications or funds. That means buying your own rentals, learning how to use cost segregation and bonus depreciation, and learning how to qualify for a real estate professional or the short-term rental tax loophole. Now, what if you have a different goal? Then you need a different path. Let's say you're really burnt out in your job and your goal is to get to financial freedom quickly. Now, if that's you, then you're going to need to scale. You're going to need to grow your portfolio quickly. That means you're going to need a lot of money. Some of that's going to be your own, but you're going to have to learn how to find money from other sources. You're also going to need to learn how to build up as much equity as possible in every deal, and that requires a different skill set completely. For example, you'll need to get really good at finding great deals as well as negotiating, so you have equity in the property on the day you buy it. You'll need to get really good at managing contractors so you can renovate your properties and build up a lot of equity in the property. And this is why getting clear on your result matters so much. It gives you focus. It eliminates noise and distractions. It helps you ignore strategies that look exciting, but don't move you toward the outcome you actually care about. And if you're thinking, that sounds like a lot to figure out on my own, you're right, which is exactly why the next step is even more critical. Once I'm clear on what I want real estate to do for me, the next step is simple: find a mentor. Why? Because a great mentor can take decades of trial and error and compress that into days. They can help you see the path clearly, learn how to invest the right way, maximize the tax benefits, and avoid mistakes that could set you back years, and help you understand which actions actually matter and which ones are just noise. But don't make this mistake I see all the time. Not all mentors are created equal. You want someone who has actually done what you want to do, someone who thinks the way you think. And if you're a high-income earner, someone who has walked that same path. Why? Because most of the real estate mentors out there have never had to shelter a high income. They've never needed to replace a high income with real estate. So they may have only done deals that produce a few $100s a month. Those deals may be fine for them, but they're not going to move the needle for a high income earner. You want someone who knows how to help you scale and protect your income at the same time. That combination is rare, but it makes all the difference in how fast you grow. I actually did a full video on how to choose the right mentor or coach, and I'll link that below if you want to know exactly what to look for. Now, you might be thinking, what if I don't want a mentor right now? What if I want to figure this out on my own? Well, that's okay too. That's what me and my wife did. Let's say you want to figure this out on your own. You're not looking for a mentor right now, and that's completely okay. But if you're going to go it alone, there's one thing you absolutely need to understand. You have to know what makes a great investment, not just a good-looking one. Because real estate is full of people chasing tax benefits or some shiny object without actually buying great deals. Now, here's what we'd look for in a property if we were starting from scratch. It needs the cash flow really well. You want to buy it at a discount, not at full retail. You need the ability to force appreciation through renovations or better management. You want a location with real potential for future market appreciation. And you want to structure it so you can take full advantage of the tax benefits. Each one of these takes knowledge, skill, relationships, and experience. And this is exactly where many new investors make their biggest mistakes. They invest locally, even when they live in a high cost of living market and none of the properties cash flow. They buy turnkey properties that they can't force appreciation on just because they want the tax write-offs. They avoid renovations because they don't know how to manage a contractor and miss out on that forced appreciation. They assume they can't negotiate, so they don't even try. And they place big bets on market appreciation while owning properties that bleed cash every month. I actually have a full video explaining why turnkey properties alone won't make you rich. I'll link that below if you want to dive deeper. Now, you can figure all this out on your own. You absolutely can, but it takes time, and you're going to pay for that education one way or another, either with money or with mistakes. There's one more trap I see a lot of people fall into, especially early on. They confuse income-producing opportunities with income-producing assets. And this is exactly where all those shiny objects show up. Flipping houses, short-term rental arbitrage, leading syndications. Those can all make money, but they don't necessarily build wealth. Because unless you're converting those activities into assets that pay you long-term, they're not pathways to freedom. They're jobs. Jobs that distract you from your goals, jobs that eat up your time, jobs that make you feel like you're making progress without actually moving you closer to your real goal. So you have to be really honest with yourself. Are you chasing income, or are you building your asset column? This is a lesson I took straight from Rich Dad Poor Dad. It's not about how much money you make, it's about what you own. What keeps paying you month after month, year after year? If your goal is to replace your income, buy back your time, or step away from your job, then you have to focus on owning assets, not just doing work that looks like investing. Now let's bring all this together and talk about the most important step you can take after watching this video. Here's the most important thing I can tell you. You don't need to have it all figured out. You just need to get started. Choose a market, start building your team, start looking at deals. What you're trying to do is find properties that meet those criteria we talked about. And most people assume you can't. Most people will tell you that those properties don't exist, but you can, and they do. We know they do because we've helped people find them in hot markets, cold markets, and everything in between. As Henry Ford said, whether you think you can or you think you can't, you're right. If you believe you can't find deals, you won't. If you believe you can and you learn how, you'll start to see them. And everything begins with that first step. If you're not sure what your first step should be, book a free strategy call with our team. It doesn't cost anything. There's no pressure. It's simply a way to stop spinning and start moving. Because once you move, once you take that first action, you start to build momentum. One step leads to the next, then the next, and the next. And before you know it, you'll look back and realize how far you've come. You'll look back at 2026 as the year you stopped waiting and started changing the trajectory of your financial life. Thanks for watching, and I'll see you in the next video.